Just checked in on the guys, got a refurb going on locally, just making sure everything's all right there. Mainly cosmetic stuff left now. It's the gas man's there sorting the boiler out, but mainly painting, decorating, carpets going in. Nearing the end of that one, which is good. We'll get that rented out quick time and refinanced as soon as we can. Monday is usually going over the portfolio, making sure everything is as it should be. We've been paid on time. Any developments or refurbs, they're coming in on time. Making sure everybody's doing what they should do. Don't normally do many viewings on a Monday. Made me think this morning about how being a connector of people is one of the most important skills you can have. Just putting people together, not necessarily profiting from it. Well, at least you don't need to profit from it necessarily, but just being known for the guy who knows a lot of people holds a lot of value. I don't say it lightly. I mean, if you're the go-to guy to put people together, it opens up opportunities that wouldn't be there otherwise. So you don't necessarily have to go out your way to be that person, but when you're being in the same industry and when you know a lot of people in that industry, you sort of naturally become that. And now in my life, I'm, quite often if somebody needs a trade or whatever, I can just pick up the phone and make that happen very quickly. If anyone needs access to capital, I can do that pretty quickly. If people need deals, I can find the deals, or if not, if I haven't got any there and then, I know people who to call to make that happen. There's a good book called The Go-Giver, and it essentially talks about the mentality of a lot of people is, a go-getter, go and get what you want in life and whatever, which I agree with. But this book was about go-giving, which is essentially give everything you've got to helping other people and making sure that they become a success. You can sort of, in my opinion, overgive, particularly if you don't have any boundaries. But in a business sense, if you give everything you've got to people, I tend to find everything just comes back at you in multiples of that. It doesn't have to be money necessarily, it's contacts, network. Don't be fearful of people doing things behind your back or whatever. If it happens, all right, big deal. You might lose out on some money or a deal here and there, whatever. You can take that. But if you are overly abundant in how you sort of operate and how you put people together, and you're not fearful of losing a few quid here and there, things open up to you, opportunities open up to you. So that's one of the biggest lessons I've learned over the last decade or so. I paid back an investor today 43 grand, so we borrowed 40 grand off him to do a deal, and because he's a good lender and because he doesn't ask many questions, he just we draw up a loan agreement. As soon as it's signed, he sends the money over. There's no solicitors involved or anything like that. We do use a loan contract from solicitors. I mean, it's not something we've drawn up, but we just edit the details now as and when needed with this guy. He lands the money in our account within 10 minutes of signing the loan agreements, which very often we do digitally now, and the money's in the account. So for that flexibility, we actually, on this specific loan, because of the risk, it was a bit riskier than the loans we normally take out. We paid 18%, that's 1/8, over 12 months. No minimum term, meaning we could pay the loan back whenever it suited us. And I expected to be able to pay that loan back within 4 months. However, it took us 5. So that was because of legal stuff with the property that we were selling. So it actually that loan cost us £3,000, which I think worked out at 7.5% over 5 months. And a lot of people, will say, it's expensive money and whatever. A mortgage is what, 5% now, 4.5%, 5%. So they might say that loan is expensive. I suppose it is if you look at it in that context, but you pay for the efficiency and the relationships that you built. If they put their money in that account in 10 minutes, rather than needing to wait for 3 or 4 months and loads of questions asked, and another big one, security. Obviously this guy, if a loan is of a larger amount, he does have security on the properties that we were acquiring, but because it was only 40 grand, he didn't need any security. He did at the beginning, but he doesn't now. He trusts us implicitly, so that's good. But again, I say more or less every time, it's all to do with who you know and the relationships you've got and tapping into each other's network. I first met the guy who helps us out with these loans, and we help him out. It works both ways. I mean, nowhere else gets 18% per annum on the money. I first met him about maybe 8 years ago, something like that, at a property event, and he was just a guy who had a couple of buy-to-lets. I think he still works full time, enjoys what he does, and just puts his money out to work. At the beginning, he was quite risk averse with us, which I completely understand, and I'd be exactly the same. But now it's, I don't know how many times he's lent us the money now, but it's quite a few. He doesn't ask many questions really. He sort of has a feel for what we're up to. So is it to buy something cash? Is it to do a refurbishment? To do whatever we're doing? And we tell him, obviously, we give him everything we possibly can to make the decision for him. And if I'm being honest, try and help persuade him to lend us that money. But because we've performed every single time, even if the deal hasn't gone 100% as planned, he gets his money back, as does every other investor we work with. Even if the deal is 50 grand short of where we thought it would be on a valuation, for example, a revaluation for a lender, we'll tap onto our credit cards if we don't have the cash available. That's just the way, in my opinion, things should operate. That is the risk you're taking, particularly when you're doing like no money down in from our perspective. If we don't have any of our capital in, then we have to put risk. Our value is in the knowledge and the experience we have. If we do not perform, then the value has to come from our capital in some way, even if that's going onto a credit card, personal loans, whatever, to make sure 100% make sure that the investors get paid back. And along with being, that's just good business practice, it's also like a moral principle. If someone gives you value, the value's got to be reciprocated and vice versa. So that's the way we do things. And starting to raise capital is never going to be easy to begin with, because nobody knows what you're doing, nobody trusts you. If you've just started out in this game, don't expect people to just open the checkbook. It's ludicrous. You get taught on these stupid courses that, just go and find joint venture partners and all this. You can't just go out to the market and expect the market to give you whatever you're looking for. You've got to put the effort in, the work in. You've got to put yourself in front of the right people and do as many deals as you possibly can without access to this capital to begin with. When I first started out, I was finding these deals and selling them to the investors, and then the investors started lending me the money to do the deals. So it wasn't as if I just, can I borrow 100 grand? And they say yes, and then, they write the check and sign the loan agreement and whatever else. It doesn't work like that. It's took 5, 6, 7 years plus now. I think in the last 12 months we're pushing 2 million quid in private investor capital, and relatively speaking, that's a lot more than what I've done in the past. But in terms of some of the guys I know, that's just like pocket change for them. They're up to 50, 60 million, some of them, borrowing from private individuals. And as they say, it's sometimes easier to raise 10 million than it is 100 grand. And the more you get into that sort of mentality and you see it for yourself, the more you realise how true it is. So I guess what I'm trying to say is don't expect things to land in your lap when it comes to borrowing money, and always, no matter what it costs, get the capital investor funds back, even if the deal does go south or it doesn't return what you think it was going to return. I've never been through a recession. I started in this game 2013. I'm expecting to hit one fairly soon, if we're not in one already. Now, depending on how the market reacts to that news, or even if we've actually been through the worst of it, which is what a lot of people are saying now, a lot of so-called economists, which I use lightly, we might have already been through that bad time, which is inflation has essentially done all the hard work here and in real terms devalued the asset prices, property being one of them. But I don't actually, I haven't been through one. So a big market downturn of 15% plus, for example, how I deal with that is something new to me. But how we buy deals, as they say, you make the money when you buy. So we buy steeply discounted and use investor capital for that. I wouldn't use investor capital, private money, to buy things at market value, because there's not a deal there. There's no point. So if you're buying 30-40% below market, which is possible, even in good markets, bad markets, any market, it is possible, because it's all to do with seller circumstances. If you can buy it 30% below market, then a 15% drop, your deals can take the interest 15% that you're paying private money, if that's what you're paying. I mean, we're borrowing at the moment between 8%. I signed a loan agreement on Saturday, 8%. Up to 18%, which I paid back today. So obviously, depending on what the investor wants and how risky the deal is, determines what rate we borrow at. So yeah, I hope that give a bit of context to private investor capital, and not being disheartened if it's difficult at the time of listening to this, but also, you've got to put the work in. You've got to prove your value to people, even if it means not making much money in the meantime, up until you've got that experience and that knowledge behind you.